Welcome to this channel, a channel that explores projects and events that are happening around the world with more focus on Africa. In our today's video, we'll be looking at a key infrastructural project which is being constructed in Uganda, the Uganda oil refinery project. As we know, Uganda discovered commercially viable oil deposits in the albeit and Graben region in 2006. Since then, the country has been establishing effective management procedures to promote growth and development of the oil industries. We know that proven oil reserves are in the tunes of 3.5 billion barrels, and it's expected that the country will be fetching $2 billion per year for the next 30 years once the country start oil production. It's expected that first oil will be produced in 2025. So a number of projects have been earmarked to actualize the oil production in the country. We have a refinery, a crude oil pipeline which will run from the albeit region all the way to Tanga port in Tanzania, and this is the channel that will be used to evacuate oil from the oil fields to the overseas market. Then there is we have the production facilities in Kingfisher and also in Talenga. And yesterday, 1st February 2022, marked a very important milestone for oil production in Uganda, because on this day the final investment decision was made. The country has been waiting for this moment, and with this decision, now production facilities will be built, and also the crude oil pipeline, the two most important facilities as far as oil production in Uganda is concerned, will be built. So with making of the final investment decision, now the actual construction of these two facilities can start. And with this construction, it's expected that there will be an economic boom. There will be provision of employment, there will be transfer of technology, and so many other benefits which will be derived out of this decision. On the oil refinery, the progress has been made also, but at a very slow pace. Despite the fact that the oil refinery has progressed slowly, it will not affect the two other projects, because the refinery is supposed to process oil that can be sold in Uganda and also in its neighboring countries. So the other components of the oil project can continue as the country prepares to build the oil refinery. So Uganda oil refinery will have the capacity of 60,000 barrels per day, and it will be located in Kabaale, Hoima District. It also involves construction of a 211 kilometer multi-products pipeline from Kabaale to a distribution hub in Mwambula, which is located in Mpigi district. The construction of the refinery was a recommendation from the National Oil and Gas Policy for Uganda 2008. So this policy recommends refining the discovered oil in country to supply the national and regional petroleum products and meet the demands for this region. It can also, its construction is also justified by the another paper, which is the East African Community Strategy for the Development of Regional Refinery, which was made in 2007. So this paper, or this strategy paper, recommended that, among other things, there is a need to develop a second refinery in East Africa, and mostly to be developed in Uganda. This region only had one refinery, which was located in Mombasa, and it has since been shut down, although it has been revived. To actually this project and also ensure that it serves the purpose, a feasibility study was conducted. Out of those two recommendations, the policy and also the strategy paper, the Ugandan government contracted Foster Wheel Energy Limited, a company from the United Kingdom, in 2009 to carry out a feasibility study on the development of a refinery. The study looked at the key aspect of developing a refinery in the country, such as the size and configuration of the refinery, the location, the financing, as well as the market for the petroleum products which will be produced in the refinery, and also the economic viability of refining petroleum in the country. The feasibility study recommended that Kabaale parish in Beseruka sub-county, that is in Hoima District, would be the most suitable location for the refinery. This due to the centrality of this area in relation to the entire Albertine Graben, and also the proximity to the oil fields. There is a sparse population in that area, so it means that the people that will be displaced, their numbers will be low, and also the area has a relatively low-lying terrain, among other key considerations that were made. The planned refinery will produce LPG, diesel, petrol, kerosene, jet fuel, and also heavy fuel oil. So these are the products that will be produced by these, and they will be sold in the region and also within Uganda. So with these, there are benefits that will be derived, and that's why the government of Uganda went ahead to build the refinery, despite some opposition from various entities, and that's why the process has been delayed, as we'll see. The bidding process was long. It has taken so long, and this delayed the actualization of the refinery. The government of Uganda, from the beginning, preferred a small production capacity to prolong the longevity of its oil discovery. This preference is one of the factors that has led to delay in the bidding process. It pitted it against the three major exploration companies in the country. These companies preferred rapid harvesting and export of the crude oil via the pipeline to the Kenyan coast. So with these disagreements, the process has taken long. Remember, initially the pipeline that was to be constructed for evacuation of oil was to pass through Kenya, but Uganda preferred Tanzanian route for various reasons that are covered in another video that we have done on the East African crude oil pipeline. So the process of bidding for the company to construct this refinery started with the hiring of a transaction advisor for the Uganda oil refinery. In March 2013, the government of Uganda contracted Taylor de Jong, TDJ. This is an American independent firm, and it was supposed to advise the government on the oil refinery. The transaction advisor was to help the government of Uganda in sourcing the lead investor, sourcing for financing for the refinery, and also formation of a refining company. In October 2013, the bid for construction, operation, and 60% ownership of the refinery in a public-private partnership arrangement were made. 6 consortia qualified for the second phase of the public tender, which was aimed at selecting a lead investor who will develop and operate the 60,000 barrels per day refinery. So the 6 consortia included the China Petroleum Pipeline Bureau, this was from the People's Republic of China, Then we had the Marubeni Corporation from Japan, Petrofac from United Arab Emirates. We had RT Global Resources from Russia. We had SK Energy from South Korea, and Vitol from the Netherlands. In June 2014, reports indicated that the 4 of the 6 companies submitted detailed proposals for the construction of the refinery. At that time, the firm still left in the bidding process were 4. We had the China Petroleum Pipeline Bureau, Marubeni Corporation, RT Global Resources, and SK Energy. In 2014, the consortium, which was led by RT Global Resources and SK Energy, emerged as the 2 best contenders. They were requested to make a last and final proposal so that the winner can be selected, and this was to be done by August 2014. In February 2015, the consortium, which was led by RT Global Resources of Russia, which included Telconet Capital Limited Partnership, VTB Capital, JSC Tafnet, and GS Engineering and Construction Company, won the bid to build the refinery. Reports in July 2016 indicated that the talks between the government of Uganda and the RT Global Resources broke down. So this led to the consortium to pull out. So the bidding process did not stop at that point. It went on, and Uganda then began to negotiate with the reserve bidder, and this case was the company that came second in the bidding process. This is SK Engineering and Construction of South Korea. The new consortium included SK Engineering and Construction, the KBD Global Investment Partnership, private equity, the China State Construction Engineering Corporation, Haldo, Tapos, and Maestro Oil and Gas. Still, these did not succeed. The negotiation process broke down, and this led to the government to start a new process of negotiation, and they started negotiation with the Guangzhou Dongsong Energy Group, which is a Chinese company. Others in that consortium, including China Petroleum Engineering and Construction Corporation, SPEC, and China African Fund Industrial Corporation, and Guangzhou Silk Road East China Design and Engineering Institute, Exim Bank, and the Industrial Corporation Bank of China, among others. These talks still did not succeed. They collapsed in June 2017 when SPEC, the main contractor of the consortium, pulled out of the talks. The reason as to why these talks are failing is because there is a misunderstanding on issues to do with the tax, among other elements that Uganda was so keen about. In August 2017, a new consortium led by the General Electric of the United States and JK Minerals Africa of South Africa agreed to build the $4 billion refinery, where they were to own 50% and 10% respectively, while the government of Uganda and other investors were to take up 40%. So the other members of this new consortium including the Yatra Ventures, the Intercontinental Asset Holdings, Saipem Spa of Italy, among others. So these firms were competitors during the initial bid. However, they came together and formed the SPV, Special Purpose Vehicle, the Albert and Graben Refinery Consortium, AGRC. So this is the firm that won the bid, and since then they have been trying to move the process ahead. So this company, the SPV, is expected to develop, design, finance, construct, operate, and maintain the 60,000 barrels a day refinery. The whole arrangement is a public-private partnership. In terms of ownership, as you have seen, the company that has been formed for the purposes of actualizing the refinery is the Albertine Graben Refinery consortium, which includes General Electric of United States, which owns 50%, and also the JK Minerals of Africa, which owns 10%. So the companies which are in this consortium include Yatra Ventures, Intercontinental Asset Holdings, Saipem, Spa of Italy, and then there's the other 40%, which is owned by the government of Uganda. And the government of Uganda invited other East African country. We mentioned about the East African strategy for the construction of a refinery and also the energy sector in the whole. So in that strategy, it was recommended that the East African countries should come together to in building a refinery. We already had one refinery in Kenya, and then they recommended that a second refinery should be built, and it should be built in Uganda, and other countries should also have a stake. So the Ugandan government in this arrangement owns 40% of the stake in this country, but it has invited other East African states to co-own it. Kenya has committed to take 2.5% stake in the Ugandan refinery, while Tanzania wants 8%. The other African countries are yet to commit. Rwanda has done it. But if they don't take it, then the Ugandan government will have to look away to fill the gap. The project framework agreement has already been signed. It was signed in 10th April 2018 after several engagements. So the company, the SPV, has committed $17 million for pre-FEED performance bond, which has been issued and confirmed by the government of Uganda. The project framework agreement became effective, and the pre-finance investment decision activities such as FEED, environmental impact assessment, and geotechnical surveys have commenced, and this happened in September 2018. So the Albertine Graben Refinery Consortium will have each of the members undertake specific role during the final investment decision activities, including the engineering, procurement, and construction of the refinery. So progress has been made. The special purpose vehicle, the Albertine Graben Refinery Consortium, has commissioned FEED for the refinery, and this process has been completed and has been submitted to PAU, Petroleum Authority of Uganda, where it is being reviewed. Environmental and social impact assessment is currently ongoing. It is 2 years since it started. Two companies, Atacama Consulting and DNVGL, are taking are engaged in this process, and they will do the impact assessment for the refinery and also other components, which will include water intake at Mbegu on Lake Albert, which will supply water to the refinery. They will also do an impact assessment for the refinery and multi-product pipeline, which will take oil to Mpigi for the distribution to other East African countries and also within Uganda. Resettlement action plan is for land acquisition process is currently going on. It is being undertaken in 2 phases. We have the resettlement action plan study, which has been completed, and then resettlement action plan implementation. The RAP study has been completed and the chief government valuer approved the evaluation reports. Implementation has started with the sensitization and disclosure of compensation packages to the PAPs, or the people who are affected by the project. When it comes to financing, this is the process, or this is the stage where the parties to these companies are supposed to commit some resources. So far, African Finance Corporation has advanced $20 million for the construction of the refinery. African Finance Corporation signed the financing deal in 2019. At the time, it was reported that other financiers, including Africa Development Bank (AFDB), Prosper Africa, a US government initiative that unlocks opportunity to do business in Africa, and another US-based firm, Trace and Development Agencies, had promised to sink money into this $1 million project. As we have seen, final investment decision is yet to be made, but it's promising to know that final investment decision that has taken long for the other two projects, that's the crude oil pipeline and the production facilities, has already been made. So it's hopeful that with completion of the environment impact assessment and also compensation process and positive review of the FEED, then the financial investment decision will be made. So what are the benefits that are expected from this project? So the East African and Central region has only one refinery when you compare it with the other region. For example, South Africa, which has 7 refineries, and North Africa, which has 21 refineries. So with that kind of a situation, Uganda and also other East African partner states have a challenge when it comes to supply of petroleum products. The refinery in Uganda will boost the region's refining capacity and also ensure the security of supply of these petroleum products, especially in landlocked countries such as Rwanda and Burundi, now in Uganda. Besides being a strategic investment for the country and the region, the refinery will improve Uganda's balance of payment, where it will reduce the petroleum products which are imported. And this is a very huge boost for the country, because the country uses a lot of resources, a lot of money in buying oil, in buying petroleum products from outside. Now, when they are being produced in the country, it saves the country a lot of foreign exchange. The project will also contribute to economic gains in Uganda. During the construction period, there will be some temporary jobs, and also when the process is completed, there will be people who will be employed to operate the refinery. And it's expected that 650 jobs, permanent jobs, will be created out of this. The development of the other industries which rely on petroleum products will also create employment, and this creates a multiplier effect in the country, leading to economic development in the country. Other benefits include contribution to the country's growing energy requirements by providing heavy fuel oils which can be used for generation of liquefied petroleum gas, and this will help in offsetting the use of trees for domestic cooking. As part of the deal, the players are expected to also come up with ways through which they can provide alternative energy. the two companies that are engaged in construction of production facilities and also the construction of the crude oil pipeline have committed themselves to provide alternative energy sources such as solar power and other clean energy. So with construction of or with production of LPG, this will help in offsetting cutting down of trees for the purposes of cooking. The government of Uganda, as it has stated in several occasions, is committed to ensuring that the process of developing a refinery is successful. It has shown this through creation of the laws that will help the process and also implementing international best practices. So this is expected to be completed within 3 years, and it will have a budget of between 3 to 4 billion dollars in it, and it's expected to be ready when Uganda gets its first oil in 2025. So with actualization of this project, the whole East African region will benefit because they will have a source of one of the commodities that takes up most of the foreign currencies, and also to provide employment to Uganda in the short term and also during the operation period. So thank you for watching this video. We'll be doing more of this as an update, and also look at what impact will the final investment decision that was made as far as implementation of the two other projects, what the impact it will have as far as the oil project in Uganda is concerned. So thank you, and look out for more videos on this topic and also on other topics that we have done.